earlier this week, NYSE parent company Intercontinental Exchange announced a strategic investment in global data distribution. In fact, ICE will invest up to $2 billion into prediction platform Polymarket, and that will allow ICE to distribute Polymarket's event-driven data to a global institutional audience for the first time. Joining me now with more is Chris Klein, co-founder and COO of Bitcoin IRA. Chris, thank you so much for joining us this morning from Scottsdale, Arizona. And I want to get to this news with you. What stands out to you regarding the strategic investment ICE is making in Polymarket?
Well, first, Phil said it pretty well, your last guest. He's a good friend of mine. I'll actually be in studio with him in New York next week. So it's a tough act to follow there. But he kind of nailed it, that this is an intersection of, we've been dealing with this kind of broad stroke regulation for the last 4 years. And I think this is a great indication with ICE coming in with, I think, was it about $2 billion, up to $2 billion investment into Polymarket. And it really just kind of captures this consumer sentiment for predictive markets, or what's coming next. You know, it's as mundane as what Taylor Swift song is going to be played the most, right? Or how long the government shutdown may last, and those types of things. And it really feeds into this consumer almost instant gratification where I think Phil said it best, in essence, it's gambling on different things than just stocks and derivatives, but now you actually on real live events. And so I think that this is a clear indication that this intersection between traditional finance and what's coming with decentralized finance are really about to hit fever pitch here soon.
Interesting, Chris. I do want to talk to you more about the cryptocurrency space. I think for viewers watching at home, probably they most know it by the word Bitcoin, right? The token Bitcoin. And it did reach a new all-time high of $126,000 a token earlier this week. What is fueling this rally?
There's a few things that are fueling it. I think, if you don't recall, when I saw you in April, I had said that it was going to be 180K by the end of the year. And you kind of laughed at me a little bit because we were at, 70,000 back then. So I was a little bullish, and I still am bullish for those reasons, for the same reasons. Underneath it all, you have the halving effect, which is, everybody says it peaks around 450 to 550 days post-halving from last April. And this is where this built-in demand that's coming is meeting limited supply. So in conjunction with the halving, you also have institutional action, not just what we just talked about with Polymarket and ICE, but institutional players beyond just companies like Strategy and building treasury, but you have nation states positioning for reserves, and the United States included, in holding what they already have on their balance sheet, possibly increasing it in a net neutral setting. And then you have this ETF play. The ETFs weren't around 2 years ago in the last cycle of halving, and I think it broke records, 120 billion of inflows in a matter of a short period of time. And this is all happening in a backdrop of currency debasement. The dollar is suffering its worst year in my lifetime, and it's not showing any signs of shaking off some of that fatigue that's taking place. You pump enough monetary supply over the years, and eventually it gets diluted to the point where we're seeing the real impact here. You have this kind of, it's a perfect storm environment for Bitcoin to have an epic Q4. I think we'll all be smiling by the end of the year as we turn the corner into 2026.
I want to drill in on ETFs, Chris, and you mentioned the rise of these ETFs. What can investors find in these products, specifically Bitcoin and other cryptocurrency ETFs, when they look at their portfolio at large?
So they're finding that asset that's available for that riskier appetite that seems to be at play with most consumers. Obviously, with an ETF, it's as easy as click, 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 right? You can go to Fidelity. I think Vanguard actually just reversed their course of allowing the Bitcoin and the crypto ETFs in. And we just got started. We have the Bitcoin, obviously, but you have Ethereum. And with recent changes of the SEC earlier mid last month, it may be upwards of, some people are saying we could have almost 5,000 crypto ETFs ETFs before the end of next year. You also have the S&P came out with the crypto index, right? So now there's an actual index that's being built, and this is feeding into that appetite of the consumer looking for exposure to arguably the best performing asset for the last decade. And what we do is somewhat parallel to that. We just, instead of doing it in an exchange traded fund, our clients actually invest directly into any of up to 87 different cryptocurrencies in their retirement savings.
I want to go back to what we talked about earlier, Chris, and ICE, the parent company of the stock exchange, making up to a $2 billion strategic investment in Polymarket, a prediction platform, getting that access to key event-driven data to institutions around the world. That has been noted to be in the DeFi space. What do our viewers need to know about the DeFi space, where it stands, and how it's evolving?
Yeah, it's having its second run, really. DeFi had what kind of caused the self-inflicted wounds of 22 and 23 was there was just misuse of and rehypothecation of staking and other elements. It's basically the leverage tools of building additional yield and that financialization of cryptocurrency. Instead of just sitting and holding long-term in a wallet, people are using it for leveraged ETFs. You're seeing this entire DeFi space is going to drive not only what you were just talking about with Polymarket of the data. The data is a big piece of this, right? That's part of the reason for the investment. If you watch Thursday Night Football, for example, they have a prediction of who's going to rush the passer. Amazon puts it on the screen, and that's just a piece of what people are looking for. You're going to take this even further and start seeing where predictive markets are and the data behind it becomes a reality for tokenization. RWA, or real-world tokenization of assets, I think will be the story told next year in 2026.
Chris Klein, co-founder and COO of Bitcoin IRA, joining us from Scottsdale, Arizona. Chris, thank you.
Thanks for having me.